Do we know if James is there? Oh. Welcome everybody to our long verticals and diagonals webcast. I'm Connie Hill. I'm happy to be here with you today. You know, many times when we set up our trades, we will put in an exit point that is based on a percentage of the max gain. And we've been doing pretty good that way most of the time. However, today we're going to take a little bit different approach. And instead of saying we're going to be satisfied with a percent of the max gain, we're going to base it on support and resistance and other technical indicators. Sometimes those might be triangles or flags. Primarily today, we're going to be using support and resistance. And you'll see as we look at those trades why that would make sense to do so. All right, I am joined in the chat, I believe, by fellow coach and friend, James Boyd, great veteran of the markets. He's here to help me answer your questions, maybe some things I can't quite get to, although I'll keep my eye on the chat. When you do have questions, we definitely want to hear from you. Want to give a shout out here to David Jackson, Jay Richardson, Life in the Fast Lane, Sharon, Cola, and many others. Happy to see all of you here. If you are new, feel free to chat something into the chat and say, hey, I'm a newbie or first timer, whatever you want to say. You will get a hearty welcome from our friendly crew here today. Well, let's do this. Let's go through our disclosures and let's get down to business. Index options and regular options carry a high level of risk and are not suitable for all investors. One thing you need to know about with your long options is your max loss is potentially what you put into the trade, okay? We will be using the Paper Money software application. It's great for educational purposes. It's not perfect, but it is a fantastic tool. One thing to be aware in the Paper Money account is it will not assign short options early, and that's one difference between the paper account and your live account. In your live account, you could be assigned early, and that's pertinent in some of our trades that we do sometimes. Probabilities, when we talk about those, they're theoretical in nature and never guaranteed. Past performance is no guarantee of future results. Investing involves risk, including the potential loss of principal. All right, today this is what we're going to do. We're going to look at some new setups. We're primarily going to focus on long verticals, okay? Long verticals are a strategy that's fairly, I'm going to say straightforward. However, I think it can be ignored, and it could be something that you might want to have as one of your bread and butter strategies. Okay, so I like to spend a little bit of time on that. Let's do this. Let's head over to the Paper Money and take a look at what is going on here. And we're going to start out with just kind of what the market's doing. Now, you guys know, you've been probably keeping track that we just put in another, I shouldn't say we had nothing to do with it. The SPX index put out another all-time high yesterday. And pulling back a little bit earlier this morning, it looks like the markets are kind of clawing their ways back into things. Dow was down a little bit. The NASDAQ was down a lot. They're just kind of crawling their way back. So right now, technically, the SPX is up for the moment. On our NASDAQ chart, interesting, it was, like I said, down a fair percent earlier today. Now it's about right at the break-even point. You can see this nice candle, nice bullish. Looks like maybe it's bouncing off our 30-day moving average, which is also in the vicinity of that diagonal resistance that it broke through a couple of days ago. On our Russell 2000, our small cap stocks, it put in another all-time high yesterday. So we're seeing a lot of bullishness in the marketplace. And last but not least, we'll take a peek at the Dow Jones. Now, it's still got a negative candle here on the day. It did gap down as well, or actually it did not gap down. It gapped up a little bit and then it's been dropping, okay? So maybe a little bit more weak on that side, but it's only down 0.34%, which is not incredible, all right? Now our volatility index, which we'll typically take a look at, is in a lower range. You can see down here, oh yeah, look, it's you know, in the past couple, 2, 3 months here since May, maybe lows have been around 15-ish. And where is it right now? Yeah, 1537. So back near lower ranges, which means we shouldn't have a lot of volatility, although we're going to see pockets of it. Things are shifting, right? We see sector rotation all the time, and sometimes we'll see some volatility in there. Now, at the beginning of the class, Koala asked something about a technical indicator, a new one, a MACD. If we had time to cover it, I don't have time to cover it right now, but that is something we could explore in a different session, either this one or another one during the week. Okay, could be also something that maybe I could post about in my X account. I will mention I'm on X. I'm Connie Hill CS, and I'll post educational content throughout the day. James does a lot of great posting. You don't want to miss James. He is James Boyd CS. All right, let's take a look at initially here. Let's go with IBM. What's going on with IBM? I mean, it had a great last year. Peaked up here, all-time high again, 332. That was back in June. And since then, it's kind of struggled. What happened here recently is they had their earnings announcement. Based on the news, I'm going to zoom in here a little bit. Based on the news from this earnings announcement, it looks like that would have been, I think they usually do it at night. Yeah, so they did it after the market closed. So the next day it gapped down, but then what's it been doing since then? Oh, it's just making higher highs and higher lows. So very short term, it looks like the short term trend is now a little bit bullish. When somebody sees a pattern of maybe a higher high, a higher low, and maybe even a second higher high or a second higher low, then they might feel a little bit more comfortable going in, doing a bullish trade because they can see that swing of momentum going on. The other thing I was noticing here, you could draw a line in here that maybe this area where the gap was, many times that gap area will act as a support and resistance. So wherever the stock gaps down to, that might be the resistance level. And it looks like it was kind of using it here recently, that 228 area. So went through the other day, came back, and right now it looks like it's bouncing off of what was old resistance has become new support for the stock. So given that we're seeing that change of momentum, we're going to do and structure a bullish trade here. Now, as we look at things, we want to identify a couple of important things that we're going to put into our order. One is, where do we think it can go to? Where would be a likely target? And then two, let's go ahead and put some stops in today. We don't do that a lot in this class, but we're going to be basing everything off support and resistance. And so I think it could be entirely appropriate to do so. All right. Target wise, let's see what I had in mind here in my notes. I was seeing here, and maybe, yeah, that's a kind of a good look. Can you see here where I have this 259 line? How many times it acted as resistance at times, and it's acted as support. So it might be the next likely place for it to go. However, I want to draw in a range because we know support and resistance areas are not just one little thin line in the sand, but they might be a little bit of a range. And so if I put in that range here, maybe we could target the low end of the range, meaning down here around 255 or so. Yeah, that looks like maybe we're not looking for the entire move up to 259, but maybe just getting to the bottom of that range, okay? In this case, let's do that. So I'm going to put some numbers out here. So I'm going to put our target as, I'm going to just say 255. And then our stop loss. Well, 228.31, you can see how many times it kind of bounced in that area. And so as I looked at this, we could base it off of support, maybe go 3% below support. We could also say, where is a low point it's traded to recently that if it were to go and trade there, then it would not look like it's bouncing anymore. Okay, based on that, we're going to just come back to this candle. Somebody, if you want to call it really tight, could use the low of this day. We're going to use the low of this candle, which was July 31st. Now, if we see what the low was there, that was 216.59. If it really goes to 216.59, as we're looking at it, man, things are reversing here. This is to give it a little bit of leeway in case maybe there's some volatility, that it goes down that low. But we would want to adjust it. You know, if it has a couple of days of bouncing up, great. Let's use the support area as the new stop loss area to be counted on. So here on this one, at the low is 216.59. Let's put our stop in at 216.49. Okay, we're just going to give it 10 cents leeway. That's it. And again, this is kind of a low stop, and we're going to plan to ratchet it up as the trade progresses. As soon as it has maybe bounces a little bit higher, we're going to move that stop. So let's go over here to the trade tab. And IBM, widely traded, has lots of open interest, has these weeklies available to it. Kind of a sweet spot that sometimes traders like to target is anywhere from, say, 20 to 40 days. Might be kind of the sweet spot. Sometimes we have to go out to 50 days, and that's okay. Sometimes that is necessary. If there is liquidity in these options, these weeklies, sometimes it's nice to get something even a little shorter in that range. There's not a ton of open interest in the weeklies here, so we're just going to come out to the September 18 monthly expiration. We're going to maybe start near the money. 233.96 is the current price, so really about 235 is the closest at the money. If you want to be more conservative, you could start at 230. Now, what I had identified that maybe we might want to do here is I had said 230, 235. That might be, let's just look at it here. It might not be a good one to work with now. Actually, it looks like it's not too bad. Let's go ahead and lock this in place at 250. Now, this is a $5 wide spread. So we would be risking $2.50 to make what? To make the difference between $5, the difference on the spread here, minus the debit is 250. So we'd be risking 250 to make 250. All right. Which theoretically you go, wow, that's 100% gain. And in the past, sometimes we would put in a profit target there. Again, we're going to base this on support and resistance of the stock and where we were seeing maybe good places for that based on technicals and not math. We're going to come down here. We're going to put this as a first trigger sequential, and we're going to create an opposite order here. This opposite order, we're going to put it as a market order, good till canceled. And then I'm going to click on this little gear over here. We're going to put in the conditions. Conditions here are going to be, okay, if IBM gets up to that target we identified, it gets to be greater than or equal to 255. In your number, you might put in a different number. Maybe you'd be satisfied a little higher, a little lower. And then we're going to say, all right, if it gets lower than 216.49, we definitely want to be out. See if that got in there right, 216.49. And then just come down here, check the verbiage, make sure you have your greater than or equal than arrows the right way. So greater than, equal to 249 or 216.49 or less. Okay, let's see. Just seeing what those questions are. Thanks for picking up the questions there, James. Appreciate that. James or Sam, must the vertical portion of the webcast must be? Yes, this is the vertical portion of the webcast. Well, actually, yeah, this is the vertical portion. All right, we're going to tuck that in. We in this class are willing to risk $2,000 per trade. We've got a $200,000 portfolio, so we're willing to risk just 1% of that per trade. That doesn't mean we want to lose money. Heavens no. However, in order to trade, we need to be able to risk. So if we take our $2,000 divide that by 250, our max theoretical loss says we could do 8 contracts. Okay, that's what we're going to do. We're going to suit this up for 8 contracts. And this one as well. Make sure those are even. And we're going to put this in our grouping here of diagonals along verticals. All right, going to send it on its way. Now, some of you might be a little bit newer to options, maybe a little bit newer to different strategies, okay? In this case, we're looking for the stock to go above whatever that short strike price was, which is 235. So 235, I'm going to kind of, well, it's already got it marked right here. I'm going to go a little bit higher to 235. Is about right there. Is that a big move for where the stock is right now? It really is not. Stock's at 233.90, and we're saying go above 235 by options expiration. We've got 40 plus days to do it. Yeah, so what's going to happen is if the stock responds and starts going up, then we're going to start seeing the position become more profitable. Okay, and we're again just going to go up to this area here as far as our target goes. All right. Looking in the chat, I see there is a survey. We, from time to time, if you've been here with us a lot, you know that we'll do surveys once in a while. I don't control it. James doesn't control it. We have other powers that be that control it. But we do like your feedback. There's 2 simple questions. You can click on the scale of 1 to 10, pop, pop, you're done. If you want to answer a couple of questions, we'd love to hear your comments in that area. And I also encourage you to, if you're struggling with something, would like me to cover something in a class, tell me, use that real estate to tell me that, okay? I like to bring those things into our future sessions. So that's what we're going to do. All right. We appreciate it when you take the time to do that for us. James will post that a couple of different times throughout our session here. And I'll remind you at the end as well. If you want, you can click on the link right now. Just let it sit in the background. Next up, we've got a couple of stocks that showing a little bit of weakness. Here we've got Best Buy. They don't have earnings for a while. They're out here. And what I was noticing about Best Buy is that it was bouncing down off this 10 exponential moving average, which was kind of fast, and kind of in this resistance area, 85.61. It had put in a nice new high. Here was its previous low. And we wouldn't expect it to go beyond that previous low, and it is breaking through there right now. So opportunity possibly here. When I looked at this earlier, it wasn't down quite this far. It was up here, maybe closer to the 30-period moving average. It's really dropping quite a bit more. But the target that I was looking at was maybe down to this 78.50 area. It's a support level. It's acted as resistance, and support in the past. And so it should act as support on the way down. Okay, this would not be a very long target. It would be more like just taking a slice of the action, but not necessarily looking for something really big out of it. Okay, our target here, we're going to put that about 78. Let's go 78.60. Target to the downside. And let's talk about getting up. Now, clearly, if it were to close above the 10 exponential, that would not be good. Or even if it went and crossed above this 85.60, that is a resistance area for it, right? It should act as that. Well, we could do that, but that actually right now is quite a bit of risk on the trade. I think we could know sooner if it's having a turnabout, okay? Sooner meaning the midpoint of a large candle like we're seeing here many times will act as support or resistance for the stock. In this case, we might expect the midpoint of this candle to act like that for the stock. It kind of coincides here a little bit with the 30-period moving average. And if it were to go above that, look how much it would have come back up. From where it is right now, we'd have a long shadow here if it really did that kind of a reversal. If it did, we'd want to be out. But I want to say, okay, this drop it's experiencing is not continuing. Exit the trade very quickly. All right. So in this case, let's go with what the current price of the 30-period moving average is here, because that is just kind of like a little bit beyond midpoint of the candle. And so that right now, that's at 82.96. Okay. So that is where we're going to put in our stop. So 298 or 82.96 is our stop. I should put this as our target over here. All right. I'm going to do the same thing. Let's go see what we have available for Best Buy here. Now, it too has some weeklies. It's traded about 1.4 million shares today so far, so not too bad. If somebody wanted to look at, say, these weeklies, they could, or these weeklies, but just notice how low the open interest is. There are not many contracts being traded there. We want to be where the contracts are, okay? So we're going to open up again the September options. These are monthlies. They've been trading a lot longer than some of these weeklies. And again, right in a sweet spot that some traders like to do. All right. Now, in this case, price of the stock's at about 80 bucks. That's going to be our at the money strike price. And let's just kind of see what this will look like here. I'm going to go. Let's first look at 82, 82.50. That was the first one that I had eyed to do. And that is going to give us about a 140 debit. Okay. Which is okay, but let's compare this to, I'm going to do a blast all. And this time I'm going to say, well, what if we did start at the money at the 80 and went to the 77.50? All right, we just said buy vertical here. And I'm going to kind of lock both of these in. Both of them have enough open interest for a few contracts here. The 75 looks very nice for that. We could spread this out and go 80 to 75 so that we're in more open interest if that was a concern. But 75 is clear down here. 77.50 is even just a little bit beyond where we think it might go to. So I think we're better off doing the shorter spread and saying we're willing to risk $1.40 to make what? Well, 250 minus 140, that's going to give us what, 90 cents there, or 90 bucks per contract. So we'd take 250, the difference in the spread, minus $1.40. My math went the wrong way. I said 90 cents, $1.10 is where it would be. So we'd be risking $1.40 to make $1.10. Okay, now percentage wise, that's still a pretty decent percent, right? If we take 1.1, divide that by 1.4, that's still about a 78% return. So what we're going to do here, we're going to change that to a first trigger sequential. We're going to get rid of the more aggressive trade. We're going to keep the more conservative trade. Okay. Yes, this is a Thinkorswim platform that we're using here today. Super robust version of Thinkorswim has, well, it's the most robust version. And I don't know that it always will be, because we have a web version, we have a mobile version that do a lot and are really helpful for people that need that format. Okay. Again, let's use our calculator and figure out how many contracts can we do here. And then we're going to do the same thing where we put in our exit points based on the support and resistance and the technicals that we saw in the chart versus percentage gains that we do a lot of times in this class. So get out our calculator. If we can risk 2,000 bucks a trade and we have 140 as our max theoretical loss per contract, we could do 14. All right, get our 14 in there. Due to the fact that this, well, let's see, that'll be okay. We'll be okay there with, I was looking to see how much of the open interest that might take up. And with using these couple of strikes, we're in good shape here. 500 contracts, 3,000 plus contracts here. All right, let's select create opposite order. And again, we'll make this a market order. And remember, when these conditions get triggered, it'll just trigger a market order. We don't know what the price would actually be at that point, but we're saying condition met, go execute the trade at the next available price. Okay, now on this one, we're looking for the stock to drop, right? So we're going to look for best buy based on the mark price to go less than or equal to, this is going to be our target of 78.60. All right. Then let's put our stop in. We can accommodate it all in this area we are in now. All right, if it gets greater than, if it pops up, if it goes to 82.96, we would want to be out. It's having a little sticky problem here. Let's try this again. 82 point. All right, 82.96, make sure that's in there. Good. And if it gets greater than the 82 or 96, stop us out. 78.60, if it just gets to that area, we'll be happy with whatever profit we've been able to garner if it really drops down. And it could drop down pretty quickly. Things have a tendency to drop more quickly than they climb. And so we would adjust the stop as well. We'll keep our target in place, but let's suppose, say it closes here at the end of the day. We could use that half point of the candle, and then maybe if it drops a little bit more, then we might want to cinch up that stop loss, try to start locking in some of those gains. All right. CJ needs a late pass. All right, you've got a late pass here. Okay. So we've got a bullish trade. We've got a bearish trade. Let's look at one more, and then we're going to spend some time on our positions that we need to discuss. All right. Last one here, PepsiCo. Now, PepsiCo's in the staples group, but I was going to say, I guess we're not drinking enough Pepsi. Maybe we're drinking more other kinds of drinks that are out there, right? So Pepsi's kind of had a hard ride of it. So this one isn't as aggressive as, say, Best Buy that was just short-term experiencing a pullback. Here, we've got this downtrend going for a long period of time. You can see this 139-ish area. It's been support several times. Looks like maybe it was just support here recently until the last couple days, breaking through it. Maybe yesterday you weren't as convinced that it was going to stay there, but definitely has that bearish follow through today. Now it has a little bit of room that it could drop too. I've kind of drawn a line down here of saying, where can it find support? And again, this could be an area, right? If I use my square there, you know, maybe it's a little bit of a range. I've got it right now at the bottom of the range, you know, but maybe it's something like in that neighborhood, right? That maybe even a little bit before that. Let's see what that looks like. That looks about like 134. 134.37. So we're going to kind of take the top edge of that support. That's going to be our target. What about a stop loss here? Well, earlier today it was a little bit above this support area, right? Or support / resistance, depending on what side it was straddling. It had been acting as support for a little bit till it fell through. If it were to reverse, and it were to come back and close above this, maybe we could even use the high of the candle today. If it were to close above that area, then it's not following through. It's really not breaking through support. So we could call it pretty tight that way. We could go a percentage off the support. We could say, all right, let's give it 2% above it. Or we could use a high point on a candle that it's been to recently. Okay, just giving you some different ideas of using the support and resistance and then saying, okay, what distance from it do we want to give it leeway? So let's do on this one. Let's clear this out. And let's see 139.40, oh, missing a 9, 139.45. Let's go 2% above that number. Let's see what that calculates to, okay? So we're going to say times 100.02. All right, it's because we're doing that. Oh, no, that's wrong, Connie. You hit too many zeros here. Okay, try this one more time. 139.45 times 1.02. There gives us 100% and 2% beyond that. All right, now take us up to 142 and some change here. Where is 142 and change? Okay, that's going to be up there where my mouse is. Now, as you look at that, some of you might go, man, I think I'd know before then. I think I'd know before that 2% area if it is really breaking back up. Okay. And I would agree with you there. We'd probably know before then. So we could go, maybe what if we targeted, instead of up here with that 142.39, what if we said if it gets higher than the high candle this day as our initial stop loss? Then if the stock indeed continues to break down, we're going to adjust it every single day. We're going to come down and say, okay, how much below resistance is it now? Okay, and kind of ratchet it down if indeed the stock drops like we expect it to. If you are comfortable with the 142.23, use it. Okay, we're just going to go not quite as high as that. A high candle here is, let's get my mouse back, 141.55 is the high price there. So let's go 141.65. 141.65 is what we're going to go there. All right. So again, really based off of some measurements from support and resistance. Let's go plug this guy in. All right. Let's see here. Did we not send this in? That is looking like I may not have sent it in. Let's send our previous order in. All right, we should get filled on that. Now, Pepsi. Nice volume here today, 2.5 million already traded today. We love to see liquidity in the stocks because that generally means liquidity in the options. All right, just got filled there. On this one, probably don't need 35 strike prices at this point. We might have to come back to that. What I was considering here, and we'll see if this still makes sense, doing a 140, 135. Price of the stop's just kind of midway between those two, isn't it? So let's, we've got tons of open interest. We're happy about that. Let's do buy vertical. We can do it $5 wide. Where is 135 that we want to get it to? Okay, about 135 is just before this little bit of a range here, okay? And so we'd want it to continue to drop that direction. Max profitability is gained when you get beyond that short strike price. In this case, we're not going to say go much beyond it, right? We're just saying get down to this support area here. We've already determined we'll do our stop and our target here. Let's go plug that in. 135, 140. And I'm just going to kind of lock that so we can work with some numbers. We could even round this up to 275 to make the math a little easier for a minute. So we'd be risking 275 to make what? $5 minus 275, which would be 225. Okay, so we're risking a little bit more than we had in the previous ones to gain 225, but that's not a bad percent either, right? We say 225, divide that by 2.75. That's an 81% theoretical max gain at options expiration, okay? So let's go ahead and do that. Who says, I see that Connie is using relative short-term charts, few months. Is that typical for these types of trades? You know, these are pretty shorter term in nature, and it's not uncommon for us when we get into a trade to sometimes be out by our next class. Sometimes that is the case. All right. Let's do this. Let's see how many contracts we can do. If we can still risk $2,000 per trade, let's divide that by 275, and we can do 7 contracts here. All right, we're going to do the full 7 contracts. Plenty of open interest here. Again, we're just going to lay it out the same way. First trigger sequential. kind of seeing what the process is here. Create an opposite order. And again, we're going to make it based on a market order. Don't know what the price would be at that point. And let's go plug in our targets. All right. So Pepsi, we're going to exit if it gets greater than or less than or equal to our target of 134.37. And we want to get out if it reverses on us. We'll need that. So if it goes greater than or equal to 141.65, that's when we'd want it to trigger a market order. Make sure these are lined up properly, and it looks like they are. Now, same thing here. We would go and adjust the stop on a frequent basis, probably at the end of each day. And if we could move it down to a stop where maybe we're starting to lock in some profitability, that would be good. Technically, we could say, all right, what if it closes down quite a bit? Well, yeah, we're not going to keep our stop loss up here, right? If it continues to drop and say it drops a little bit more tomorrow, then we're going to base it more on maybe at that point we start using the resistance, go just a little bit above it. Or depending on where it is, maybe we start using the previous day's candle, okay? So these are very short term in nature, even though we're buying out for plenty of time, just so that we can be in that window. We're kind of at the longer range of that time. But we use what's the most liquid. Don't worry so much, oh, it's 40 whatever days. All right. Our intent is to be out of the trade much more quickly than that. All right. Head back here. Let's go put it in our dynamic diagonals and long verticals bucket. You're kind of getting the idea of a process here, how we spy the support, the resistance, and kind of plug those in. Chris says this is a bear put spread, a long put vertical. Yep, that's the other name for it, is a bear put spread. Well, actually, this would be a bear. Yeah, this would be a bear put spread. Okay. Sam thinks maybe a good candidate for diagonal. Could be, right? You very well could think that might be a more appropriate trade to do with it. Okay. Today, we were just focusing on our long verticals with technical analysis. Several people here that are newer to options and don't necessarily want to move all over the place with different strategies, okay? Now, let's take a look at our current trades and trades that we need to follow up with. All right. I want to start with Google. Now, we don't have the Google position anymore, but I want to explain it and what happened. Google, we did a long put vertical on it back here on the 22nd of July. It had fallen and broken through this support level. It looked like market was reacting quite negatively to it, but it reversed course on us. It reversed course on us last week. So what we did is we bought back the long put and kept our short put with the idea that we wanted it to make up the difference for us. We needed, and it did. It kept popping up here to the point that our short put was quite profitable. If we come over here to the account statement, we come to Google. Let's give it more than 8 days. We probably need to give it 15 days here so we can see all those transactions. But essentially, we were left with let's see here, I'm checking my dates to make sure I don't mix the trades in with each other. Our short put here, that 310, we had about 895 on it, okay? We said, okay, we're wrong on the trade. We had to buy back this one, or rather sell this one for a really hefty loss. And so we needed it to make up the difference. Fortunately, we were able to buy it back for 34 cents. We did that on August 3rd, which was, must be this day. Okay, gaps up. We were able to get out at 34 cents rather than risking to try to get 34 more cents out of it. It's like, man, we got 90+% on it. Great. We'll do the math later and figure out, did we actually, were we did this turn out to be a profitable trade, or did it just allow us to minimize our loss? Okay, really, when it started coming up here, it was like, oh man, not dropping anymore. We need to get out of here. Okay, next up, we have, come over here to our activity and position. We've got a few things going on there now. Let's take a look at Valero. Valero, we've got two oil type trades. Valero is one of these. We have a long call vertical going on at 305, 310. Let's take a look at the chart, and I want you to notice we're down about 17% in it. Can 17% be overcome? It could, but let's just kind of look at the chart here. On Valero, it actually had been one of the kind of the refiners that wasn't getting beat up quite so badly. Okay. Our short leg here, what did I say it was? 310. So we need the stock to go above 310. Has it been above 310? Well, it was up there at 314. This is the day that we got in. And so let me go back here real quick. Yeah, 310 is our short leg here. And so it's been above it quite a bit of the time. Here's 310. So there've been several days that it has been above it. Got a couple more weeks left on this trade. We're going to let it keep working. But what we could do is we could put in a stop loss here to say if it goes below this support, then let's get out. But right now it's really acting as good support for the stock. Let's see if support does its job here. See if it gets a bounce up. See if it can go back again above that 310 and start putting in some profits on the trades versus the short loss, the small loss that we have right now. So on this one, let's put our stop loss at 294.11. That's a little bit below the low on this day, right? So we do have an order sitting out there already that's based on taking in a portion of the profit. Percentage of the max gain is a better way to say that. So we want to kind of leave that in place, and we want to add the stop loss to it. Well, that's a little tricky to do that because here's we were looking to get 420 out of the trade, and I'm not going to change this trade based on what we're doing today necessarily. I'm not going to say let's go to resistance, but 420, we're going to leave that as the target, but we're going to have to change the order. Paper money will not let us change this order. We actually need to cancel it and create a new order. Okay, so I'm not going to, so this is how we're going to do this. Go back to our monitor tab. Come back here. We're going to do a right mouse click. We're going to create a closing order. We're going to sell the vertical. We're going to make it an OCO order. And in the first one, we're going to put in that 420 credit because we're still looking for that. And then on this second order, let's create a duplicate order here. This one, we'll make it be a market order. We'll have it be good till canceled. And then we're going to put the price of the stock in there. Okay, so here we are going to say, all right, if this stock gets less than or equal to, now I forgot that price. What was it? It was, oh, it's on my note here. 294.11 was just a little bit below the low candle here recently. Okay, so a little bit below that support level. All right, 294.11 is what we're going to put in there. So if it gets our credit we're looking for, great, we'll be out. If it goes down below that support level at a low point there, then we'll need to be out. Oh yeah, this one needs to be a GTC as well, good till canceled. We'll put this in our bucket here, and then I've got to wrap things up. I'll go out and close out that other order. Sometimes it'll recognize you have an order in there and it's saying, hey, we're going to substitute. In this case, it's probably not going to do that, but I'll go out and cancel it. All right, my time is up. Those are the only trades we have time to follow up on here today. But we accomplished quite a bit. We put on 3 new trades. We have a long call vertical and 2 long put verticals. It's going to bring those up in our order here. So we got into Pepsi bearish, IBM bullish, Best Buy bearish. Okay. Some of these other trades we're going to have to let work. I'll adjust some orders on them. Now, coming up next, what do we have coming up next? I'm trying to remember. Maybe you can. Investing in dividend stocks is what we're going to rotate to here at the top of the hour with Cameron May. That might be a class that's of great interest to many of you. What I might ask of you today is fill out that survey as we're finishing up here. Again, you can just fill in the 2 radio buttons. Number 2, follow James and I, and subscribe to our Trader Talks channel. That helps it make it so much easier for you to find our content. You can see what our playlists are. You can see what's going on today in our classes, and just kind of gives you an easy access to find our content. All right, you guys, have a great rest of the day, and Cameron will see many of you at the top of the hour with investing in dividend stocks. Thanks so much. We'll follow up on these next week. Bye-bye.